Okay, folks, welcome back. First day back from holiday. And I feel a little rusty, if I'm going to be honest with you. All right, so we're looking at the economic calendar for the remainder of this week. So I included today's economic calendar for continuity. Today we had Fed Chair speaking 8:30 a.m., which caused a lot of fireworks. And then we had Canadian Dollar Bank of Canada monetary policy report and rate statement and overnight rate and press conference at 11:15 a.m. And then we had FOMC minutes at 2 p.m. So it was a day that you would have been staying on the sidelines regardless. And we'll take a look at the aftermath of all this drama. And on Thursday, tomorrow, we have Bank of England, high impact Carney speaking, and financial stability report at 5:30 a.m. and ECB monetary policy meeting accounts, and then CPI 8:30 a.m. for the dollar and core CPI high impact. And then again, Fed Chair Powell speaks and testifies at 10 a.m. tomorrow. And we have another FOMC speaker at 1:30 p.m. Friday, we have GBP medium impact speaker 4:30 a.m. and an 8:30 PPI for dollar index and core PPI. So let's take a look at the charts. Okay, there's the dollar index. This is the daily chart, and the red lines delineate the time away when I was not providing any analysis or commentary. And the market looked like this prior to my exodus from real-time commentary. And just I kept everything on the chart as it was, except for the two vertical lines delineating my absence. Admittedly, I was looking for some rollover here. I would have liked to have seen that. If it did, it was going to run up to here. And I left you with commentary that if we trade there, we'll look to see if it wants to come back down after closing in a little bit of this inefficiency. Last week, and I'll save you all of the hindsight explanations because it's really of no benefit. I would literally just be speculating as to why it did what it did. I'd rather just stick to my weekly narratives, what I think is going to happen, and focus there. But the 4th of July week that's being delineated here, that week, the week of Passover, as it's referred to in the States, Easter, which I don't like calling it Easter, and the weeks after Thanksgiving into the end of the year, those periods I am generally that's the highest probability for me to be wrong. Okay, so if there's going to be periods where I have just a inability to show consistency, now there's been weeks in the past where I've called certain moves that were accurate for the week of Passover, the week of 4th of July, and the weeks after Thanksgiving. But generally, if you were to look at my statistics over the last 20-some years, I'm actually far worse those periods than I am better. Okay, so that's the number one reason why I like to take these times off, because I know in my history that if there's going to be a deviation, if you will, from the normal delivery of price, where things just aren't really routine, run-of-the-mill, things can creep in and cause a lot of disjointed price action. In other words, a less symmetrical market. And these weeks I've found they are generally when those criteria line up for me to be wrong. So it's good for me to take a holiday those weeks. It's good for me to be away from the marketplace. And I'm accepting of the fact that I'm going to probably be wrong. So if the tendency from ICT to be wrong those periods of the year, do I really want to be in here trying to push my luck? I don't want to do that. And I don't want to sell that idea to you. If you find a period of time where you know that your continuity is lacking, if you find that your ability to be consistent is a specific time of the year or a particular holiday, it may be something that your family actually participates in that keeps you distracted, okay, from being focused in on the marketplace. That it may not be a market related or volatility related issue. It may be just simply a lack of focus. For me, it's both. I think that Passover, I shouldn't be trading anyway because of my spiritual view on it, and the tendency, if you will, for large money to not be in participation that particular week. And then 4th of July, where it's a big holiday week, it's just it's one of those periods where there's a transition that takes place. And sometimes I'm right, most of the times I'm wrong. And it's just a good week to take off and be away from the marketplace anyway, because in the States we celebrate our independence from the folks over in England. So if you look at the volatility, it starts to drop off precipitously after Thanksgiving week, or what we celebrate as Thanksgiving in November, going into December. Now, December still has periods where moves take place, but by far and large, if I'm going to be wrong, it's going to be, again, that period of it towards the end of the year. And you really don't want to be pushing too much of your luck, quote unquote, towards the end of the year, especially if you had a good year. Why risk it in the times where the market could do a lot of things that you wouldn't normally expect? So I got questions about that, and why I would take this week, and is there any other weeks of the year where I would fancy another break? And last year and the year before, during the mentorship, I really didn't take a break during Passover, so I felt kind of guilty about it, and I'm just never going to do that again going forward. I'm going to really just be away from that week. We'll see that happen again next year. We will have commentary towards the end of this year after Thanksgiving, so don't think that we're taking several weeks or the whole month of December off. We're not doing that. I just personally won't participate in anything, and that's my normal routine. Okay, so I just want to kind of clear the air with that. But every chart we look at today is going to have this period delineated, because I really want you to focus on the fact that I was wrong about a lot of things, but I was right about the very thing that I've told you to focus on specifically. That was the dollar CAD. So some of you may view these periods of inaccuracy as a character flaw. You may look at it as it's inexcusable, therefore I shouldn't be doing that. I'm ICT. And it's just a reminder that you're going to get it wrong too. So I just want to really nail down that going into this video, that, again, reminding you that it's not about being right or wrong, but if there are times where you're just not going to be firing on all cylinders, that's an expression we have in the States, or basically just really dialed in and more apt to be right, and not, in other words, not being apt to be right, it's just better to not participate, or don't participate at all in terms of following the market. Just take a holiday. So I felt guilty in the first couple of years doing the mentorship, because I felt like you guys were paying, but it really took a toll on my personal life, my family life. My wife was really upset about it. She's like, look, I understand you want to help these folks, but we have a family, we have a life, we have things we want to do, and I can't be on a ball and chain with you on every single week of the year. It just isn't. It's not reasonable. It's not realistic, and you shouldn't be doing it either. Okay, so I just kind of want to remind you, as we get closer to the end of the year, things will slow down, but it's not a bad thing. I'm trying to build in that rhythm with you, because whether you're in the States or whether you celebrate the holidays or Christmas or whatever it is that your family or spiritual beliefs are, if you're even holiday prone, okay, it's just good to be very, very low activity those times of the year. So again, I'm reminding you now, because we'll get closer and closer to those fall months, and I'll be talking about it again, but I'm just bringing it up to you now. All right, so anyway, we have the Sibian here, sell side imbalance, buy side inefficiency. I was looking for, maybe it could have popped up in here, closed in that, and then rolled over. Long story short, either that scenario or coming back up to this low as a breaker, I wanted to see it hit that and then make an attempt to run for the sell side liquidity resting below here. We returned back to the middle of the range being that low here and the high here. And we're just consolidating around here. So nothing's really changed in the scope of the dollar index. We're just stuck in this rather lethargic trading range between 98 figure and 95 figure. So it's 300 pips of nothing going on for the majority of 2019. I would like to see the market find some support here at this order block here, and then maybe make an attempt to get up here and run this liquidity. But here, remember, we have Powell speaking tomorrow. So I don't have a whole lot of conviction one way or the other. I would like to see what the market does after he jawbones. Okay, in other words, after he says whatever he's going to say, I want to see how that response is interpreted through price action. So I want to see, hopefully, the market makers tip their hand and then give some kind of displacement, obviously, one direction or the other. I don't really need it to do one side or the other over, no, I'd like to see it run the buy side liquidity pool and continue its long-term trend. But if we don't get support on this order block here, we will probably most likely come right in here and close in this. So when we did have the sell side balance, buy side efficiency here, railroaded right through it, came back up to this level, showed a little bit of respect there for a short period of time last week. And then we had on Thursday a volatility expansion on the range, closed in this volume imbalance and came back up into the bearish order block, which is this last up close candle here, the big long beefy one. And we have since today, and now starting, yesterday's trading, but still today for us in the States, we've since given that back a little bit. If we just move this over here for a second, just to get a view on this low from this high, let me delineate that for you. Clear the high here, and then show no willingness to slow down going back up into this candle. That's the ideal scenario if it were to be bullish. Now, if we completely collapse and close in, if there's no immediate response on the order block from here to the open, in other words, it would look like this. Okay, we trade down into that. That would be the sensitivity, or the point at which I would look for the signal becoming bullish. It would have to show it here. Now, it has to show it with time of day, and it also has to show a mirror image of that in the cable and euro, preferably. Now, if we get a correlated pair SMT divergence, which is the euro dollar to cable, and they show a bearish divergence relative to SMT between the two of them, with some confluence of this order block being tagged at the same time in the dollar index, and it's a kill zone, it might be something to watch tomorrow and study. Now, you're not trading because you have Powell tomorrow. Okay, so Powell is going to be causing all kinds of exaggerated movement in the marketplace, much like we saw today. So don't feel the impulse that you have to be in here participating. You don't have to participate. You absolutely do not have to do that. Slowly engage the marketplace after Powell or any high impact speaker. Just like FOMC, we want to see what happens after that impact is felt in the marketplace. Because initially, the response is retail. Okay, the smart money is ahead of these speakers. They know what's coming. The market maker will use that as a smoke screen. So what we're trying to do is see who are they trying to lull in to the marketplace by what was said, okay, or by what the numbers were in their release. Okay, so it's not that we're chasing. We don't want to chase the reaction. We want to measure the reaction versus what the liquidity pools are, the inefficiencies that are in the marketplace, and the underlying institutional order flow. So until we get that displacement initially by that report or that speaker, we have to be very careful and try not to pretend to be clairvoyant. Okay, we don't want to act like we're smarter than we really are. We don't want to give. I certainly don't want to give that idea to you, thinking that I know what they're going to say or how it's going to react in the market. So I don't. Okay, so I want to see what IPTA will want to do post the speech, post the FOMC, post the rate announcements, those types of things. So the only thing we can do in advance to that is outline the PD arrays, and this is the discount array that I like at the moment. But if we trade through this entirely, if it does not provide an opportunity to find a consequent encroachment between this low and this high here, there is a fair value gap in there. And I'm going to leave this here because I want to use this as context for if we do break down. This will be important later on. It'll make sense later on after tomorrow if we do, in fact, come all the way down into this area. What I'd like to see it do is trade to consequent encouragement here and then rally higher, not finding any resistance at the order block here. That would be an ideal scenario. We want to see that trade through there. Otherwise, it's going to remain heavy and the sell side liquidity resting over here, which was my ideal scenario for last week. Before I went away, I would have liked to have seen a narrative to support that idea, but you can see obviously we didn't have any of that. It wasn't in the cards at all. So there it is. So if we know that the likelihood of the dollar, let me see something here. This is Wednesday, Tuesday, Monday. Why is this over here? It shouldn't be there. Yeah, that's what it should look like there. I'm not sure why it's like that. I'm looking at that as I'm talking to you. I'm like, that ain't right. So there you go. That's what it should have looked like there. And we'll want to see if it wants to come back into that Friday range, give some of that back. If it gives it back and doesn't find some support at that order block, then this was all fluff. And they're going to want to really sell against all of that. And this decline was just basically this rebalanced. And then this low and this low will be the intermediate term draw on liquidity. But if we take out yesterday's high, which would be the 9th for me, even though we have a new candle here trading Asia, this high here, if it takes that high out, then I wouldn't be afraid to look for the buy side liquidity resting above these highs to be the intermediate term draw on liquidity. But as it is right now, it looks like unless this order block supports it and we don't get a consequent encouragement support right in here, then this is going to be most likely where it draws. But now, because Powell's speaking tomorrow, if I were forced to decide whether I want to be a buyer or seller, I wouldn't have the conviction either way right now because of Powell. Powell can be the instrument, okay? And I don't believe that what he says moves the market. The market is going to move regardless. It just knows, okay, when I say it, the market maker knows whatever he says is going to instill a sentiment, okay, or it's going to disrupt a sentiment or build a sentiment. So either way, it's going to be mind control, okay, for traders. They're going to be involving themselves in the marketplace based on their perception of what he's saying. Dovish, hawkish. They're always trying to interpret what they mean, okay, and that to me sounds like tarot card reading, okay, or trying to be clairvoyant again. And I don't believe in ESP, extrasensory perception. I just don't believe in it. And I think that style or interpretation of reading between the lines when they say stuff like that, there's a lot of times you can discount that based on just studying what people that are supposedly hardline about that interpretation or style of analysis. It's quote unquote fundamental. It's so subjective because honestly, you can see reports that come out that would be interpreted very clearly by their terminology and the things that they say that would be decisively bullish for the currency, but it screams the other way. So what do you do with that? Again, you can't say, well, it's just one of those aberrations. And because to say that means that there is a fallacy, if you will, to the interpretation model. So to me, that's why we stick to price. IFTA will tell us what we're looking for, but you have to be patient. Okay, so, and again, because I'm coming back from holiday, I really need a day or two to get kind of like back into jive. So I'm telling you all this, but you're probably saying, come on, get on with it. But part of the mentorship is if you do take a break, how do you come back to the market? You don't just, like the SWAT team bust in. Say, I'm here, I'm taking the money. It doesn't work like that. Okay, you have to go back in easy and just like I tweeted today, ease into it. I'm not trying to come back in here and trying to dazzle anyone because admittedly I feel the separation from the market. So I don't feel in tune. So especially after seeing what it did last week, I really don't feel in tune. So I really want to allow Powell to put whatever he's going to put in terms of disruption in the marketplace tomorrow, and then I can see what's going to happen. It may not have anything that is beneficial, for our discussions before Friday's close, and that's fine. But then I'll have a whole week to be able to digest on the weekend to give us our weekend review on Saturday, and I'll have a better feel for what it may do next week. So I'm not pressured at all to have some kind of magic trick before the Friday's close. That I don't really feel the necessity for that. Okay. All right, so dropping into an hourly chart, let's see what we have here for the dollar index. We have the liquidity void in here. Again, that's been closed in, and we have the consequent encroachment at the same period from the daily chart. We're trading at that point as well. A small little fair value gap right in here. That could be a point of interest. And again, that's that same level. Again, let's go back to the daily. Point of reference, that's the order block, that shaded area. And dropping into an hourly chart, again, that's that daily order block. And we also have a fair value gap in here, which almost nails the consequent encroachment as well. So if we don't find any kind of support in here, it should careen lower into that 96.40, 96.35-ish level in there. What's this level? 37. Yeah, maybe not so much the 96.35. 96.38 to 96.40. There should be some kind of a support level. How much we get there, it'll be interesting to see if we can get it. You can see relative equal highs in here, and Powell could talk us into a scenario where the dollar would find some kind of a relief rally there, and then all of this has been manipulation. So that's when I look at Powell speaking or any kind of heavy hitter, when they come out and talk ahead of the moves, or I'm sorry, ahead of the discussions, I want to see what they may want to run based on the volatility that their words invoke through traders. If I see, like we see today, we had a lot of movement, I want to see what they rated, what did they leave in place, and what did they come back and fill in already. So I'm looking for all of these points of reference where it's all hindsight, yes, but it builds a narrative that I don't presently have. So I want to go through the price action and see what is available right now, and that's what I've done thus far. And I'm not trying to sell a direction. Notice I'm not trying to do that. Whereas in the past, I'm pretty accurate in terms of saying, okay, it's going to go higher, it's going to go lower, it's going to go for this liquidity pool, it's going to go to this level, and we watch it unfold. Right now, because I'm coming back from holiday, I have to allow myself to get in tune with it. And the way I do that is going through the marketplace and highlighting areas of which they should provide a support level or a resistance level or a turning point. And if I don't see that come to fruition in the next trading session or the next trading day, then it helps me fortify a narrative. And I'm not saying it's going to happen for you tomorrow and I'm going to know exactly what's going to happen on Friday. It could, but I don't have that expectation. And I don't want you to feel like you have to have that either. So we're coming back from a break and we want to build in slowly what the market's going to do. Now, here's the contrast between that and what I was doing when I was a retail trader starting out. If I took a break because of the holiday, like Christmas, that was the only time I took a break, okay, when the market was just simply not trading for me. And because commodity markets, the brokers would close down for that, that holiday. I would, just because the markets are open up, I'm right in here. I'm trading corn. I'm in there trading, pork bellies. I'm in there trading silver, gold, and oil, and S&P, and I was trading whatever was on the chart giving me a stochastic buy signal. Okay, just because the markets were back in session. in my old age as a dinosaur, okay, I don't ever feel that desire anymore because there's certain things that we have talked about in the mentorship that we look for. So one of the biggest things in the mentorship that you should be collecting is these kind of discussions, because these are the periods where you lose your money. Now, I can give you all kinds of scenarios and profiles and models and all these little neat little things that take place in price action. It happens by time and price, and you can do exceptionally well when you're doing those things. But when you do those things or try to do those things in a period of time when the probabilities are not high. Now, I'm not saying there aren't setups or they weren't setups today. There were. The likelihood of you doing it if you come back from a break and being dialed in is very, very low. And you want to go into the marketplace, and one of our members emailed me, asked me what the expression Larry Williams said in one of his keynote speaking events talking about short-term trading. And I'll say it again here, that he said, and I love it because I live by it, you want to move very slowly when you try to make money, and you want to move very quickly when you're trying to preserve your money or protect it. And because I'm coming back and I'm trying to teach this to you, you want to have that same approach. Now, this, and in other areas where, like I many times throughout the mentorship videos, you hear me talk about my weak point of trading is targeting. Like, where do I exit? And I've always fine-tuned certain things about it because it's always evolving. And I don't think I'll ever probably be satisfied with it, even if it gets better than it is now. But I don't ever feel any anxiety or any kind of disenchantment about the other parts of my analysis because I've grown accustomed to doing the things that I do because of the experience. You don't have that right now. So the things that you're looking for and you're trying to listen for is for me to maybe, like, in a subtle way say, okay, you want to buy or sell here. And I don't have that today. So, but what I'm doing is I'm teaching you by example, because I did not look at the charts except for real quick with my phone earlier today. And I saw a couple things that were there, and they were all hindsight, so I didn't see it in advance. But the things that I do, the procedures, the thought processes, the things that I'm thinking about, the things that I think that are essential when we come back from a break or when I come back from a break, those are things that folks that write books and do courses and things, they never were helpful in that regard, because the things that work in the best situations, they tend to work. But what happens when you're forced to be left to yourself and you give yourself permission to engage in the marketplace with a not so clear perception on what price is doing? You just want to gamble. And I did that initially as a commodity trader because the separation, because of the markets being closed, I felt like I needed that new hit, like a drug addict needs a hit of the cocaine or the heroin or whatever their vice is. I felt that separation and I needed a new fix. So I would force myself. I need to get back in. I need to get back in. Someone's making money. I'm gonna get in there and do it too. So I don't want any of you to ever feel that. And because there's been a separation from me discussing things with you, maybe you've had a little bit of uneasiness and you're anxious to get back in and do something. Don't feel that way. Don't feel that way. There's so many opportunities that form. Don't ever fall into that, because I'm telling you, the majority of the times that I lost significant amounts of money were these periods here. Trading when I knew I shouldn't have done it, or rushing to get back in because I've been away from the marketplace. Okay, so in your notebook today, the keynote discussion is how to engage after breaks. And that's what I'm talking about tonight. That's not the lesson for tomorrow. I'm going to give you something price action oriented tomorrow, but I kind of want to throw that in here because it really is what I'm doing with you live now. It may be boring. Some of you probably want to quit. Come on, get into this already. All right, so 15-minute chart. This is what we have here. Price reaching into the closure of this liquidity void, and we have order block in here. So it might give us a little bit of a short-term bounce in here. Nice fair value gap here, so we could see hopefully another run in here. Another order would have been filled here using your order flow entry drill. Low-hanging fruit. All it's got to do is trade back to this high. You see it here. Started to roll over. Yeah, I still like this area, 96.40. Look for that to offer something in terms of support. I'm not saying trade it. I'm saying study it, see what happens. I'm going to be watching this as well. I don't like these equal highs for the dollar. I think this is too much ahead of Powell speaking again, but obviously we'll see tomorrow. Moving on into euro dollar. Again, euro dollar. And I have this set to the wrong. Or do I? Let's see. Yeah, here it is. All right, so this was last week. Price action for euro dollars. Go back out to the daily. If memory serves correct, I do believe that I said that the market may want to come back down in here, get in here and close in some of this inefficiency at constant encroachment. Could see it probably come down here and then make an attempt to run for this old high. If I'm wrong, I apologize, but I'm almost certain that's what I said, because I think that's what I was thinking about. But again, we opened right up last week and smashed down through this. Didn't really offer much at all in terms of support. Blew right on through it. Focus goes back to here and in the order block. We have a rejection block here, which is the lowest down close. It does violate that as well. This week's trading on Tuesday. I don't think that, again, if you zoom out a little bit, just for a flavor for what euro has done for this year, it's stuck in this large range. Now, could it be doing some long-term accumulation? I personally think it is. I think it's wanting to upset there's a lot of folks that are very, very extremely bearish on euro dollar. And I think the funds are being lulled into thinking that it's a short too. It may be surprising to them to see this thing eventually trade up into and above this high. I mentioned that, I think, the week before I went away. And that's a very, very long-term perspective. Although we do have these equal lows here. Let me take the vertical lines off. It's a little bit too busy. We have a sell-side liquidity pool resting below here. I would have liked to seen it really clear that up. Now, it doesn't need to come and get that right now, but I like the fact that it's there because it will eventually become an obvious draw on liquidity. We're in the middle of the range from this low to the high. We're right in the middle of it. If we take a closer look of this range here, we have this single candle. We essentially have closed that in. If we trade higher, again, with the exception of this area in here, we have this range that has a fair value gap, and then we have this range, which is a fair value gap. Let me double check that with that wick. Yeah. So we have a fair value gap in here and a fair value gap in here. This is a balanced price range. So if we do rally, it needs to, for the bears, it needs to stay below this fair value gap. If we trade back above it, then everything starts to lean towards a run over here. Take out the yearly high. Otherwise, we're still in this large trading range with a slightly modest bearish tone to it where, again, the sell-side liquidity pool would be the draw on liquidity at that time. So now, you're probably listening to me say the things I said about the dollar index and comparing that with what I'm saying about the euro dollar, and they don't jive. Now you understand why you have to wait, because there's certain scenarios I'm looking for in the dollar index, but unless it develops and I see supportive evidence in my intermarket analysis, there's no probability behind the setup. What I'm outlining here for the euro dollar, these are scenarios and these are the things I'm looking for to build the narrative over the coming couple days. If I don't see it, then there's nothing to do. And that's important. You need to understand that's what you're going to do, because there's going to be a time when I'm not an active role in like weekly telling you, because I'm sure at some point I'm not going to do this anymore. Okay, I don't know when it's going to be, but at some point there's going to be that time, and you want to be able to think like I'm telling you without me having to remind you how to do it and why to do it, because there's a procedure that's involved in all this, and you have to be mindful of the things that I'm kind of drawing your attention to and what you have to weigh out. These are the things that make learning, and I really mean learning, not just saying, okay, here's a setup, X, Y, Z, buy here, sell here, stop here. That doesn't work, okay? You can get signals like that and you can make a little bit of money, but invariably you're going to blow your account in these periods like this, because you're thinking, okay, the scenario is always going to be X, Y, Z, so take my profit, put my stop, and there it is. But you take on a great deal of needless drawdown, and then what happens is that starts that loser cycle where you want to get it back, and you rush to get it back because you knew you shouldn't have done it, but then what happens? You enter that loser cycle where you accelerate the losing of the capital and you blow out. Now, if you've never had that happen, it will happen to you if you break these rules. And when you learn, if you do it, you want to learn from it the first time and not have to repeat it. I'm telling you that these things are going to occur. I tell you where I'm most likely going to be wrong, and I'm trying to teach you by practical application how to go through it, what's important, what's not important, and the thought process behind it. Because if I had these things back when I was starting in 1992, I would have not lost the fortunes in real money, okay, trying to do things in periods where I really had any business doing it. So again, just saying that, it's a reminder that there may not be a symmetry between what I'm saying in the dollar index and the euro dollar. That's why I'm saying I have to wait, because a strong narrative is going to be supported in the dollar index and the pair that I'm looking to trade. For instance, the euro dollar. It should be a mirror image of what I see in the dollar index. If I don't have a very, very clear, and I mean absolutely crystal clear, there's no ambiguity whatsoever about what I'm interpreting in price action. If I don't see the mirror image of it in the dollar and the euro, or the dollar and the cable, then I don't have high probability scenario. I have an iffy scenario. Now, I can get in here and talk about certain moves in scalps and day trades, but they're going to only be low probability scenarios. And if they pan out, I can't really honestly attribute that to high probability or what you're paying for in terms of trading insights and education. What I'm looking to try to do is build the model of procedure, protocol, and respect for the periods of time when you do not have it lined up in your favor. There's a lot of accumulation that's going on in the marketplace right now. It doesn't feel like it, but things are really slow and lethargic. Look at Forex. It's really quiet right now. It doesn't stay like this. There's big moves about to take place. Now, you can get excited about that, okay? Or you can say, well, that's something to look forward to. That's the mindset. I'm not trying to get you emotionally driven. I want you to be very bored about what you're seeing and what you're supposed to be doing in between the trades. Not getting excited, not building up your anticipation, not hyping anything. We're not Twitter, okay? We're in here to be very focused about what it is we're trying to do. You're not going to do that, okay? You're not going to be consistent if you push your luck. So these lessons here, I think, are more important than the things I talk about picking out certain things in price action. Because I know that the folks that don't take these lessons in this type of video here to heart, I guarantee you're going to be sending me emails saying, I did not listen, I did exactly what you said in that video, and I blew my account. And I feel stupid because I didn't listen. You told me it was going to happen, and I still did it, and I feel like a putz. Okay? I'm trying to avoid all that for you, okay, and help you steer around that, but some of you are not going to listen. And the question is are you going to do that with enough live money where it totally removes you from the game and you end up having to work another job to get money so you have to try it all over again? It's needless to go through that. So let's go into a 1 hour chart for Euro and zoom out a little bit, a little too much going on there. So there's that fair value gap I was mentioning. It may want to come back down into that, and if it does, we'll see if it has any support there before we went away or before I went away. We dipped down below that, came back up, had a fair value gap right in here into bearish order block. That was a really nice scenario last week, which is, again, just looking at and respecting how much precision there is there. We have a CIVI here, and we have mitigation. Trades up. Both of those, nice consolidation and heavy distribution. I like these relative equal lows in here. That looks enticing still for an hourly chart. I don't see anything in here that's really clean that would need to be cleared up. I do see a small little volume imbalance here, and it's no body. It's just the wicks in here. So if we do see a spike in here tomorrow on the Powell discussion relative to his jawboning, watch this level in here, right there. Okay, so we'll watch and see what we get in there. If we get a run up into that level, that should be a target if there's something that we can capture in terms of studying price action in the New York Open. See if there's any willingness to get up to that level. If we trade through that, then our eyes go up to here. Obviously, we have equal highs here. There's a liquidity pool there. But if we're going to run into that, they're so close to here. Anything above this targets the highs that looks like a high of, we'll call 114.15. So anything around above here, 114.15, 114.20 institutional, that would be the draw. We have a potential market maker buy model. We have consolidation, return back to the consolidation, distribution, smart money reversal, low risk buy. In here, over here between 113 big figure and 112.80, there should be another measure of accumulation if this model is there, and that should take us up here. Now, if we trade above this, again, that would take us back into this consolidation. The original consolidation is really boxed off at this level here with some measure of stop running. To me, since this is so close in proximity with these equal highs to this high, I don't think they need to come back to just here and be calling it a day. I think they would want to come back all the way up and clear the high. I mentioned it 114.15, 114.20. But this area here, volume imbalance, would tell that story. But again, watch 113 big figure, 112.80. If we get anything on a lower time frame, 15-minute time frame, 5-minute time frame, fair value gap bullish, discount array, anything of that nature, that could spell a run into that 113.30, 113.35 level, which is the volume imbalance on the hourly chart. Moving into a 15-minute time frame, we closed in all of this inefficiency here. Got a little overzealous there. Order block, sensitivity, rally. Nothing outside of what I just said stands out. And again, you can see the market maker buy model here. Consolidation, return back to consolidation, distribution, more distribution, smart money reversal, low risk buy. So we want to see some kind of accumulation occur, ideally for the bulls. And if we're going to see a continuation on the downside on the dollar, somewhere in here, ideally institutional 112.80 to the 113 big figure, because all these up here runs on liquidity, stop runs. So we want to see it anywhere in this area there. Okay, so 15-minute time frame, 5-minute time frame. What am I outlining here? There might be a scenario where we can catch a move for a study between here to here. Okay, so anywhere inside the shaded area to this volume imbalance. That's what you want to be studying the next 2 days. Okay, see if there's anything in there that provides that. This is what I'm talking about when I come back from breaks. I want to see things start lining up like that, because if I start seeing moves that I can predict, if you will, it builds confidence, it builds perception, and it builds a continuity with the marketplace that I don't have right now. So I got to get back in sync with the marketplace, and these are the things I have to do. So I'm outlining how I would look for a scenario to unfold. If I do see this in here, I will participate in a study. In other words, I'm practicing with it, and then it'll help me build it. Now, if I get in here and I do it and it completely collapses, goes down here and trades into this fair value gap, then that will tell me something else. But this video could be very, very long about all the potential scenarios, okay, that would line up, that would lead to me building a narrative. Right now, I have zero bias. I have zero perspective about what it should do, but this is what I like right now. I'm looking at the chart live with you. This is the things that I don't necessarily do when I'm doing the commentary videos. I usually come to my conclusions, and in my notes I talk about what it is I'm looking at. But it's salient here because I did take a break, and I have to go through the procedure with you as I'm looking at the chart. So I'm teaching it at the same time. Okay, so I'm practicing what I teach. All right, so that's something to look at. So this is an area where we would expect to see the discount array, which is a previous area of distribution. Now it should become an area of accumulation, and then we trade back up to a premium array. In this case, was that hourly volume imbalance. Okay, go back in the video, rewind a little bit, and you'll see again what that level is. I'm not going to go back out to a higher time frame to show you. All right, so the cable market, this is the daily. If memory serves me correct, I believe I said that I wanted to see it trade back up to here, close up in some of this inefficiency. I mentioned that we would look like this fractal here. It did all that here. It rallied up, cleared some equal highs. And last week, again, just like we saw with the euro dollar, I mentioned that we could come back down in here. It went down into it and then kept on going. We saw it trade below the rejection block of this swing, and we traded below the rejection block of this swing, which is the lowest down close. If we look at the hourly chart, okay, and right away my eye goes to this level right there, and I'll explain all these other things to you. I see this area right in here. This is way too clean. This just looks like, I mean, to me, this looks like classic John Murphy technical analysis textbook resistance. This looks like John Murphy's textbook of the financial markets in technical analysis. And I butchered the title up, but you know what I'm talking about. It's a classic book for retail thinking. This is the epitome of resistance. Okay, so same thing. We have consolidation, leaves consolidation, back to the consolidation, distribution, redistribution, another measure of distribution, smart money reversal, low risk buy, reaccumulation. So we want to see again a run up into this liquidity pool here. Okay, we do have a fair value gap here that I noted ahead, and I was looking at this earlier today, and you can see the dot like highlighting the range of the rectangle. That little dot is highlighting the midpoint, so that can act as your consequent encouragement, not having to draw any kind of lines. You can see the sensitivity of that right there, beautiful, and then heavy distribution, consolidation, another measure of distribution. This is that level I was thinking about ahead of our break, seeing if it wanted to come down in here. I said on the hourly chart, and I know I said this, all these levels in here are too clean, and I said that we probably want to come back down in here, clean some of that up, and then maybe try to make an attempt to go up into that daily old low. We traded down into it, small little bounce there, but then quickly gave up the ghost, came back up into the middle of the range, and then another measure of distribution. So we did take out this sell side liquidity pool here, came back up, fair value gap, hit it, and another measure of selling off. Right now, again, it looks like a market maker buy model. What we do clearing this area here, and again, it may not do it, but I think it warrants the opportunity to see where we are right now, and I'll run up into the 25.90, maybe spike into the 126 big figure. So if we add that horizontal line at the 26 big figure, it may want to draw back to that, but really just any level above these equal highs, just by 1 pip is enough. That would be a completion of the market maker buy model. And we did clear up a lot of liquidity here. We stabbed down, accumulated more. So we might want to see some displacement. They might want to take it up into a revisit of that 126. What we do at that moment then remains to be seen. But again, just like I did with the euro dollar, I'm outlining something that I'd like to see unfold on cable. So if we drop down into a 15-minute time frame, you can see right away we have a small little inefficiency in here. I like this one right in here. And I just want to draw that a little differently in terms of color, contrast that against what I've already got on the chart. So that way if we come back to it, that should be something of interest. I like the fact that we've consolidated. If we get through this level here, we'll be looking for a run above here and then into that 126 big figure. Again, I'll take this off. Too clean, and we have a premium array here in the form of a SIBI, sell side imbalance, buy side inefficiency. So we'll look to see if it wants to get up in there tomorrow. It may happen on London tonight. It doesn't need to wait and wait for PAL. Apart from that, I don't really clearly see anything that really jumps off the chart at me, because this looks like it's done its business up here, and this is the only thing I think on the near term needs to be unsettled. So it's too clean. 125.90 to 126 big figure. Anything above 126 big figure, we'll have to see what we see. And moving on into dollar CAD. This was the one I said, gun to my head, and again, go back and listen to the videos, folks. It's for new people, it's going to sound like, because if they look at the last video, they'll say, well, he was expecting the euro to do this, and he was expecting the dollar to do that, and he was expecting the cable to do that. And yes, I said all those things, but I said now, but if a gun were put to my head, and these were my exact words, I would be looking at the dollar CAD to go short, running the sell side liquidity pool here, and then this sell side liquidity pool here. Okay, and I gave you a lesson or two. It was 2 lessons on external range demarkers, and you can see that we actually did run both sell side liquidity pools, and we're still looking to go lower. You have a fair value gap in here, and we traded up into that perfectly to the pip. All right, so the high on this candle comes in at 31.44, and consequent encouragement comes in at 31.44 and 5 pipettes. And we had the old low here on February 1st coming in at 130.67, which is basically 130.68 on anyone else's platform that doesn't use pipettes, which is the reason why I have the level calibrated to that level, 68, and even though it's showing it's slightly off. But from 130.68, which is what that level should be calibrated to, 130.68, 30 pips below that would take us down to 130.38. The actual low came to 136 and 7 pipettes. So we did get a 30 pip run on liquidity, and this is a daily chart, folks. Really nice distribution model. If we move into an hourly chart, again, I'm not trying to beat my chest and say, see how smart I am, see how smart I was. Okay, I'm saying that that was the ideal scenario for me to watch, and that was the thing that we were looking for ahead of my break. That said that I would, if I had a gun to my head, which trade would I be in? I would be in dollar CAD. Now, obviously, being away from the marketplace, I'm not in anything. So, on an hourly basis, we had a BISI here, buy side imbalance, sell side inefficiency. Price came down here, filled in that, and then came all the way up, cleared equal highs. So this is really big time manipulation, seek and destroy. That's heavy, heavy, heavy reasons to want to be a seller. Okay, price starts to drop down. We have a fair value gap right in here. Okay, fair value gap, the low, 130.84, the high, 130.84. Perfect. Complete closure of the fair value gap, heavy distribution. We want to be seeing the reactions below this low. Actually, I can just use the shortcut here. We have the liquidity pool resting below there at 130.48, and then we have another at the low here, which I do suspect that's probably going to be the one that they reach for, because this is probably not enough of an interest. A lot of folks that want to go long, and this has been leaving folks that want to buy on breakout. They're trapped, and they're not giving any sympathy for them. 15-minute time frame. Really, really nice return back to a bearish order block. Perfect. Sell off. We have a small little fair value gap in here. You can bring that down. The stop would have been above here. Entry would have been in here. And again, this is all hindsight. I know. But again, I'm teaching you how I go into the marketplace and I start building perception. If I want to see what the market's going to do, or most likely going to do, or reach for, I have to see and identify and annotate my charts where they've done specific things. When I say IPTA leaves signatures, okay, these are the things I do. I go through price action and I weigh out what has been done. And I work from the higher time frame down to the lower time frame. And by doing that for a day or two when I've been away, it's exactly what I do to build my understanding and my perception. If I do that enough, it builds a perspective that I can trust. Right now, I don't have anything, except for I do think that the dollar CAD is going lower. All right, so we had this old high here, multiple times stabbing here, and this right here, this candle during the post news events on dollar CAD, the rate announcement. That's what that run is here. So right now, whatever was said, and I don't ever care to know what they say because, again, I don't have any faith in the words or the verbiage. I want to see what the market's doing because ultimately the central banks are going to reprice this wherever they're going to reprice it, regardless of what anybody says. Okay, whatever the rate announcement really is either. So that's going to be it. We're looking for a run below here, and it's another 20 pips or so. Okay, so now, again, that's not much, but it is what it is. And do I have anything else on this chart? Nope, I don't have anything else on that one. I think that's going to be it. So, what did we learn tonight? I went through the process of what I do, what I'm looking for, how I internalize things, and I look for certain things to unfold, but I don't put a lot of weight on them as trade setups. I want to see if these signatures provide the moves, and if they do, then it helps me build confidence, and then it builds my perception on what the current institutional order flow is. Because as of right now, apart from dollar CAD, I don't know. And this is the pair I told you to all focus on anyway. Okay, and it's delivering. So I'm not saying you would have done anything with this one today because there's been a whole lot of things in the news that would have kept you on the sidelines. But from an exercise standpoint, there was certainly something in here to watch and study. And I'm trying to see if there's anything. Let me drop into a 5-minute chart just for spits and giggles. And let's see, really nice little fair value gap right there. That one single candle trading out, closing it in. That's beautiful. And small little one here at the top of that. And heavy distribution. Fair value gap there. Nice run lower. So it looks like all the premium arrays, even on the 5-minute, they're all being respected. And what I mean by that is anything that you would have looked for a short scenario, and I already know what some of you new folks are thinking. Well, of course, this is all hindsight. Anybody can do that. Not in the sense that we do to identify institutional order flow. You have to look for these things in price from a higher time frame and work your way lower. As long as they're respecting them and they're removing any supposed support from a discount array, then your institutional order flow is bearish. So in other words, you want to see the down close candles break. They are not being bullish order blocks. You want to see the lowest down close on swing lows being breached and not traded back above. That's a rejection block. That's a discount array. If we see those signatures continuously being manifest in price, order flow is bearish. So while that's in play, you just simply look for inefficiencies that it would be reaching for to rebalance. And that's going to be the discussion tomorrow. I'm going to really talk about that in concert with, there's a theory that the market is an auction theory delivery. And that's partially true, but not entirely true. And I'll teach it tomorrow and by what I mean by that. And I think your understanding about price delivery is going to be really increased as a result of tomorrow's lesson. But you want to be looking for these things from a higher time frame down. And if there's ever a question or a doubt in your mind about what it is from a higher time frame, you are automatically in a low probability condition. So if that ever is the current situation for yourself and you are taking lower time frame setups, you absolutely have to dial back your leverage and your risk. But if you're trading in a high probability scenario, that means you can clearly determine and trust with great deal of conviction what a higher time frame directional bias or institutional order flow is. Then and only then do you use your high end risk model. In other words, whatever your highest threshold for risk. Some of you feel that 2% is your high end. Some of you are thinking 1% is too much. Maybe 0.5% for some of you is your high end, and you don't want to ever go above that. That's your criteria for that. But anything other than a higher time frame institutional flow that's either deemed bullish or bearish by your analysis, and you have 100% conviction behind that, you are immediately in a low probability condition. So take that for what it's worth, because it'll save you a lot of heartache and grief. And those of you who don't want to believe me, you'll remember these words after you've incurred the loss and pain. And I think that's going to be it for tonight. I pretty much did everything live with you, how I felt, what was important. What is this? I think that's the fair value gap there, consequent encroachment. I don't think I mentioned that, but you can see it on an hourly chart here. Perfect delivery right to the pip. It still looks heavy. It still looks like it wants to come down and clear out the 38 level on the downside. So do we leave the 130s, dip into 129s? That's something I'll be looking to see also tomorrow. This here looks really nice. I mean, we had all of the fundamental news that come out today. The only thing that would upset this would be whatever, Powell's jawboning and how the central banks use that. This could very easily come down here and run the low and then scream higher and attack this area over here. So from the bullish stance, if we get everything upset as a result of tomorrow's discussion by way of Powell, any rejection of this low and takes us above these equal highs, my eyes go right to here. Okay, so that kind of like gives you the expectation. If this is taken out and rejected, and we do trade above here, whatever scenario from this price point here, if it's taken out on the upside, that leaves this range here for bullish scenarios. Okay, so you can frame models to go long in any of that range. But as it is right now, it's going lower, and I see this as a liquidity pool that it's drawing for. Okay, and I want to see if we tap into that 129 with any kind of expansion on the downside. And that, my friends, is going to be it for tonight. I will talk with you by way of a lesson video tomorrow. Give me until 5 p.m. my local time tomorrow to have it uploaded, and I'll teach you something really interesting tomorrow as well. Until then, I wish you good luck and good trading.